With Chris Weston from IG. He's joining us live, actually, from Melbourne. Good morning to you, Chris.
Morning.
Arguably the biggest data drop of the week happening today, 12 noon. It's China. It's not just GDP, but also retail sales and industrial production. Where is your focus going to be primarily, and do you expect to see a relief rally if we see GDP coming in around 7%?
I think if you get it at 7.5%, then I think we probably will see a bit of a relief rally. I think we get 7%, and the market really comes off quite sharply. To be honest, the consensus is at 7.5%, and the range is 7.8 to 7.3%. I think BNP Paribas, the most dovish on or bearish on the street, at 7.3%.
So, Chris, sorry just to interrupt. So, you don't think that the comments coming from China's finance minister on Friday sort of lowered expectation for this read coming from China, and that 7%, just may in fact be enough to impress markets?
Well, first of all, the comments that he actually made on Friday were about the full year. They're not about the second quarter numbers, I think. So it's a question of, I think he has actually corrected himself over the weekend. There was an article that actually came through in Xinhua, who basically the biggest Chinese publication or news syndication site in China, and they've come out and actually corrected him. He's now saying that 7.5% is totally reachable. I think those comments have been backtracked and retracted, similar to sort of what we've been seeing from the Fed and ECB. The comments have startled markets a bit, and he's actually retracted those comments, and there's been a correction made saying that they will hit 7.5% for the year now. So I actually think that's part of the reason why we did see the Australian dollar pick up about 20 pips this morning. It's the best performing currency today, so that's the key. I think he has retracted those comments, and what he actually said on Friday was that the PBOC and the Chinese economy can handle 6.5% because they are very, very happy to let growth abate whilst reforming the financial sector. The other really big thing that we saw over the weekend, which I think is really important, is the money supply. If you're looking at the total credit that's coming through in China's economy, it's the main reason why growth is slowing, and they are reforming the banking sector. If you look at M2 money supply, that came out at 14% on Saturday. The market was looking for that to be at 15.2%. The prior month was at 15.8%. So it has had some massive slowdown there. That's a really, really important situation. It shows the shadow banking committee, who are obviously extending a lot of this cheap liquidity and cheap loans to small, medium enterprises at very, very high rates. A lot of these people shouldn't probably be getting credit. A lot of that money supply is contracting, and that's exactly what the PBOC want to see. So that's a really big positive. New yuan loans coming out 860 billion yuan, a little bit higher than the market comes out. So I'm looking at the actual real situation in China. The two things that you're looking at the moment is the supply of credit and growth. One really leads to the other. And we've already had the supply of credit, which came out lower than expected, which is a positive. Next thing is the growth number. The second quarter numbers will be at 7.5%. That's my best guess today. I'm pretty much running with the consensus. I think the market is slightly positioned, so if we get 7.5%, 7.6%, that could really see a little bit of relief rally. And of course, we're going to take our inspiration from the from the CSI 300 and the Shanghai Composite when they open at 11:30. We've got the futures which open a little bit before that level, so that's really going to be the litmus test. See how people take that weekend data, and of course, 7.5% is what we're calling for GDP. So that'd be good to see a nice rally again in China.
So, Chris, do you think that the doomsayers or the naysayers over China talking about a hard landing are just overdoing it?
Well, I think there's going to be further pain in China. There's no doubt about that in my mind. We're not going to have an all-out collapse. It's really about reform that we're seeing in China, and that will continue. There's no doubt about that for me, that the financial sector will continue to need to deleverage, and that's going to have negative ramifications on growth. I think Macquarie over the weekend have downgraded their 2014 GDP for China to 6.9%. And as the finance minister said on Friday, they can handle 6.5% growth, they can handle sub 7% growth, as long as the financial sector is reforming. So for me, it's about short-term pain for a longer-term gain. And as Australians, we're exporting about 35% of raw materials to China, making about it's nearly 6% of our GDP. We need China long term to be on a sustainable footing, rather than growing at exponential amounts, which with massive risks in the financial sector.
We have China today, so looking forward to that. Later in the week, we're expecting to get more commentary from U.S. Fed Chairman Ben Bernanke. Do you think, Chris, it will be a little bit different story than what we saw last week, that he'll be playing to his audience more, the Republican Congress, his first testimony this week, and that we'll likely hear more reassurances about the pace of tapering and the fact that it's likely to happen this year.
Yeah, I think the market stays. I think the market's going to be pretty reluctant to put on any kind of major long dollar positions, and risk should be supported going into the Bernanke testimony. We'll hear pretty much what we've been hearing, that tapering will probably likely occur this year, but there's going to be a massive separation between the start of tapering and an actual increase in the Fed funds rate. And I think the Fed chairman did a fantastic job of that last week, making sure the market fully separated the two out. But there is a major difference between a Fed funds increase and the start of a more normalised balance sheet, or less expansion of the balance sheet, so to speak. And I think the market's done, got that in its stride. So I think he'll come out and say that, tapering is likely to continue if we hit our targets, but policy is going to remain very, very accommodative. So I think it's good. We've had a dovish chat from Bernanke the other day. I think that will continue. For me, the other side of things is leading into the weekend, and we've got the Japanese upper house elections on Sunday. That's going to be a very important situation from a macro perspective, and certainly from Japan. It'd be really interesting just to see how many seats he can win in the upper house, and because that would just really give a stamp of approval for Abenomics, and that would be very positive for the Nikkei, negative for the yen. We've already started seeing outflows after 8 weeks of inflows. So I think that the Japanese elections will be very interesting as well. So Bernanke and Japan, really, for me, are going to be the two situations, as well as some of the ECB chatter that we've got. Mr. Asmussen's probably going to be the key one there as well, and he'll probably retain his current view as well. So lots from a macro standpoint, lots on the US earnings side of things, and we've got a number of production reports coming through in Australia as well. Rio and BHP, obviously the key ones with Woodside. So from bottom up stock pickers will be looking at that very, very closely, just to see how production feeds into the August earnings.
Yeah, because this is the last sort of nitty-gritty before we start to get to reporting season.
Exactly.
To the here and now, we have the ASX looking like it will tick higher upon the open. Where are you watching? What's sort of in your view?
Well, we've got the market just about 13 points higher at the moment. The key level from a momentum perspective is to try and break that 5,012 level. I mean, that was the high that we saw last week, and technical traders will see that as also the 61.8% retracement of the May to June sell-off. So, in a sort of weak news market, I suppose you've got a lot of supply coming on the market there. So a daily close below that level would be very positive from a momentum perspective, and see pushing convincingly above 5,000. So good number from China, potentially could see us trade through there today. And it's all about materials at the moment, Nadine. Materials and resource stocks clearly on fire at the moment. Technically they look good. A lot of short covering coming through as well, but that's where the momentum in the market is at the moment, and that's the sector seemingly to be leveraged to in the short term, especially ahead of Bernanke and the promise that liquidity is going to stay in the market for longer. So that seems to be the space, and of course BHP and Rio very firmly in focus this week with their production numbers. So yeah, I'm looking at that, but confidence in the equity market seems to be quite high at the moment. I mean, you can look at the survey numbers in the US, and the highest levels for a long time. So for me, equity is still the place to be.
But volumes here in Australia, I know, were quite low last week. What's that telling us? What are you expecting this week?
Well, I mean, as long as volumes don't, you don't see sub $4 billion days, then then everything's fine. I mean, obviously, textbook theory suggests that you want to see on a big day, you want to see north of north of $6 billion worth of turnover on the market a day, but you can still make money in a low volume market. So as a day trader, that's really what I look for. But of course, textbook theory suggests that you want to see high volume to back the conviction. But I think at this market at the moment, there's a lot of trader money, and there's still a lot of I suppose there's a bit of question marks from the investor community.
Okay, Chris, great to chat. We'll speak with you later in the day. Chris Weston from IG there. So Chris flagging